Okay, this week we had the Fed, and we'll just start right away here, saying that a mild recession is now likely. And Peter Schiff came out and basically said, yeah, if they're calling for a recession, which they never do, and he's right about that, um, we're going to get a severe recession, or as I like to call it, a depression, especially if we get the deflation that David Hunter's calling for. But we'll just kind of have to wait and see and let it play out. Um, let's get it right into last week's uh, economic data, and starting with the 30-year mortgage, which I like to cover, down 0.1%, and the inflation rate really was kind of the start of the week. Now I thought that Monday and Tuesday the market would go up a little bit, which is what it did. It was pretty benign, waiting for all of these reports that came Wednesday and Thursday, Friday this week. But the CPI came out lighter than expected, and the core inflation rate year over year came in line, and the inflation rate year over year came in at 5%, which was less, which, the market reacted that fairly positively. And then the FOMC minutes, where they mentioned that they see a mild recession coming for this year. And so we wound up down on Wednesday just a little bit. Then Thursday, the PPI came out, and it caused a rally on Thursday, where they were expecting the PPI to be zero. It was down 0.5%, with the hopes of inflation will start to ease, and a lot of good news associated with that. And then the core PPI down 0.1% when they were expecting 0.3%, and down 0.3%. So obviously things are, as we've been talking about for a while in these reports, have been slowing down, and the numbers are obviously finally catching up. Then today, Friday, the retail sales expected to be down 0.4%. We're down a full percent. And interestingly, the market reacted pretty negatively to that. And that was after a whole slew of reports this morning on banks that were reporting their earnings. And they were good. I mean, JP Morgan's was, knocked it out of the park. But all the banks that reported today, large banks, reported very well on earnings. And the market started to react positively. And then, of course, some different bad news started to come out. There was Boeing talking about their sales being down for some problems that they're having. And then at 10 a.m., the Michigan Consumer Sentiment report came out a little bit stronger than expected, but in general, it was just kind of I think everybody was a hangover to me from Thursday, where the market rocketed up, and then, anything, if you would have blown it over, it would have made the market go down. Taking a look at next week, we have, as I follow the manufacturing index, it's been getting beaten up. They're expecting something better, slightly better than a negative 24.6% that we had the last time. But these are all things that indicate to me that the economy is not very strong. Building permits, we'll take a look at that. They're expecting 1.45 million building permits. Since we've been kind of on a downslope in the interest rates, I'm guessing that probably will play out, but we'll see. Housing starts 1.4 million. which would be down a little bit from the 1.45 that we had. And, then we got a slew of, we have Bowman from the Fed speaking that afternoon. Not really a market mover typically, unless he said something crazy. And then my expectation on Wednesday on the 30-year mortgage is we're going to see it start to tick up. The 10-year was on the rise. We'll see that here in a minute, and I expect the mortgage rates to probably tick up, maybe 6.4, maybe 6.5%, somewhere in that vicinity from where we are. Initial jobless claims are Thursday next week. The Philly manufacturing index. We have that, and then all of the global PMIs that we follow. Anything less than 50 is contracting. They've kind of hung in there, except for obviously manufacturing's been below 50. And then we got services slightly above the 50 mark. Business confidence is down. So we got all of these that are coming out. And so that's what we can expect next week. This week was really the market mover, Wednesday, Thursday, and Friday, and it was, everything wound up for the week. Nothing, that you would say, wow, that was unbelievable what kind of week we had. I thought maybe after yesterday, if that momentum would have kept, then but you kind of got to expect some type of a slowdown after an improvement like that, or an increase like that in all the markets yesterday. But today, we in essence made a pretty good comeback. Before we get into those charts, just take a look at the investor sentiment. The sentiment didn't change much from a bearish standpoint. It got better by 0.5%. But here's the interesting thing: a lot less people bullish now as of Wednesday night. And have moved to the neutral area. I guess if you get with all the craziness of the ups and downs that we've had, especially after Monday and Tuesday, we had slight up days, and then Wednesday we kind of had a down day, and then then this survey was taken or completed. And just kind of an interesting thing. I rarely do I see things move from bullish to neutral like that. In a week that was up, for the most part. And I'm guessing maybe current bias probably played a role. So we're still not anywhere near the averages here on these, where people are far more neutral than normal, slightly more bearish than normal, and a lot less bullish than normal. And then taking a look at the fear and greed index, people are, some of the indicators they have here, market momentum, stock price strength, everything are showing that the conditions are, greedy, and of course with the way things are currently playing. And so going back to the markets, we have the Dow Jones. We come down here. We thought maybe we're going to collapse back into this downtrend. Came down, hit it, bounced. And we talked last week a little bit about cup and handles. We got maybe a potential cup needs to get completed here, up in here, and then maybe it'll build a handle. I don't know, but in general, it wasn't a bad week overall. It was a week of, like I said, here's Monday, Tuesday, and then Wednesday was kind of the down day. Then Thursday was a rocket, and then today was a recovery, the hangover from the rocket. And then SPY, basically the same thing here. It starts to recover, as we saw in the Dow Jones. We're well above this downtrend that we were in for a long time. That doesn't mean we're out of the woods. It just means that we're not in this severe downtrend, and we've got a lot more people that are bullish now that we've come out of this and we're staying above this upward trend. Is a good sign. And SPY trying to recover this uptrend line here. We get above that, we start bouncing off of that. Then things are looking good for bulls. And the Qs have been in this channel. I've had this channel out here for a while, and the channel basically is being respected fairly well. We poked out up here, thought maybe we get something. Thought it came down, but then just kind of went back into this channel. Then we went below it, and now we're kind of in the middle of it. And we'll go back down to the bottom here to, let's say, 303 in the Qs, or up to 330. I'm betting on that it will continue up. We've got higher highs and lower lows, or higher lows, and all that going on here. So I think this is shaping up fairly well. I expect this to kind of round up here. Maybe we hit some resistance around this line here. Say we clear, let's say 333.47 in the Qs. Then I think you're off to the races, pretty much, and we start to recover things. Now, what to guard for? Get a double top here. That would not be good. Then taking a look at the 10-year, it got beaten down. Now it's made its way back up. As far as the yields on the 10-year, and which somewhat, well, I guess it's not super surprising, but I'd like to seen it close down here below 3.4%. That would have been better, especially if you're bullish. Then that would help you some. And then the DXY, and I built this channel this week. We were up here. The dollar has fallen, and then now we got this bullish engulfing candlestick. But we're also at the top of this channel that I've run, and maybe something like that. And if I don't play the dollar, but if I were, now would be I short it, and if it did go, I put some stop in up here. Not a trading call, because number one, I don't trade it, but it's just saying the setup looked, pretty decent for me, that it could run down here somewhere, breaking 100, if we start a downtrend again. And I think that would change a lot of things, actually. Let's see. The oil, we did, we had that pop up back at the beginning of April, and it's kind of started up here. My expectation still is that this thing will roll over. We'll come down here, fill the gap first, and then, maybe another pop, and then something go down after that. And then the VIX, the volatility index, is the lowest. It's closed the lowest it has. I think I went back and I saw back in here about back around this time frame, the beginning of the whole market mess. So we're kind of back down to those levels where we close, which it's favorable then for bullish bullish conditions, from that standpoint, especially on a down day. The VIX collapsed 74 0.74 4.15%. Kind of surprised me. It was pretty much down the whole day when I looked at it. Not really much to report there, and that's really it for the week. And I'll look into the economic numbers from last week and the upcoming week. My final comment is, my prediction is, the FOMC minutes and a lot of the the Fed members have come out this week. Basically, you can almost plan on a 1/4 point increase at their next meeting in May, and I don't think it's going to happen. And this is just a prediction. I don't know. I just get the sense that something is going to break again, and I don't know whether it'll be regional banks. I think they've got a lot of stuff going on behind the scenes to maybe mitigate those types of things. But I just get the feeling that with these increases, it's kind of like, damn the torpedoes, full speed ahead. And that seems to be the Fed mantra right now, which is, we've had increases up to the Fed funds rate, but at the same time, they're doing screwy things with, and we can argue over whether it's QE or not. To me, if they're doing QE, and we still got all this massive spending going on. I just get the feeling that something between now and the next Fed meeting, I believe there'll be a pause, and just a gut feel. I don't have a crystal ball. Just feels like it. After following markets for over 30 years, I just get the sense that something is going to happen, and this 1/4 point rate hike is going to disintegrate. But we'll see. And they've even talked about. I was listening to Larry Fink today, and he basically thinks that they're going to raise a 1/4 point 3 more times. I don't think that's even possible, but that's what someone else is saying. And I don't know how he concludes that, but he's certainly got a lot more experience and a heck of a lot more money than I do. So, does that make his prediction better than mine? I don't know. But I'm just telling you my feeling. It's like playing whack-a-mole. I think they got the banks semi under control right now. That doesn't mean another one can't fail. Would that be the next shoe to drop? I don't know. It could very well be something else that we're not even looking at this point, and that's what it usually is. And that'll probably put a little bit of fear back into the market, depending on what the event is. I don't see it necessarily as a black swan, meaning it's one of those things that's going to trigger a collapse in the market. I just see it's something that just one more thing where the Fed's going to have to say, maybe this isn't such a good idea to go ahead with a 1/4 point until we get this. I do not expect a cut in the Fed funds rate. I think we're going to have this kind of period where we'll have the pause, and even if they raise in May a 1/4 point, the pause after that I think will be fuel to the markets, and we'll see how it plays. I'm curious to see how the upcoming weeks. We don't really have any big economic data coming out next week, but something always seems to come out. It's the most interesting thing about economic data, and the Dow Jones and the NASDAQ and the S&P. There's always something will happen, and I'm not sure what the next thing will be. And it could be a surprise in earnings or a disappointment in earnings. Just don't know. Anyway, that's what I wanted to cover this week. And remember, there is always a better way.